Hey, welcome back to the channel. In today's video, I want to talk about an ETF that quietly does something very few income ETFs can do. It tries to grow with the S&P 500 and pay you income at the same time. And the ETF is TSPY. So I will share my thoughts on TSPY, how it works, how the income is generated, and why this might appeal to investors who don't want extreme yield but still want consistent cash flow. Before I begin, just a reminder that I'm not a financial advisor. Everything I share here is for educational and entertainment purposes only, based on my personal investing experience. Please do your own research and make sure any decision you make fits your risk tolerance. Alright, let's jump in. If you have watched my previous videos, you know that I've been gradually shifting towards higher quality income strategies. I'm still keeping some of the holdings like LT, MSTY, and WPay, etc. But I want to find ETFs that has less extreme yield, less stress for me, and more sustainability in the long run. TSPY came into my radar as I was comparing income ETFs that don't rely on crazy leverage or aggressive single stock exposure. So what is TSPY? TSPY is the TappAlpha SPY Growth and Daily Income ETF. At a very high level, TSPY is designed to do two things at the same time. First, it gives investor long exposure to the S&P 500, which means it participates in the general direction of the US stock market. Second, it aims to generate regular income by writing daily out-of-the-money call options, also known as zero DTE options. What makes TSPY different from most traditional covered call ETFs is the frequency. Instead of selling call options once a month, TSPY sells very short-dated options that expire on the same trading day. That means less time exposure, faster premium collection, and more frequent income opportunities. This daily option approach allows TSPY to harvest small amounts of option premium consistently rather than relying on larger lump sum monthly option premiums. So rather than to predict big market moves, the strategy is focused on capturing time decay, also known as theta, every single trading day. The end goal is to create a smoother blend of market participation through SPY exposure and income generation through daily option selling. Next, who runs the fund? TSPY is issued by TappAlpha and the ETF was launched in August 2024. So yes, this fund is only about 1.5 years old and I would consider it as a relatively new fund. That means we don't have decades of historical data like SPY or QQQ, but what we do have is enough information to understand the structure of the strategy, how it behaves in different market conditions so far, and how daily option selling impacts returns and volatility. TappAlpha positions itself as a technology-driven ETF issuer, focusing on systematic, rule-based strategies rather than discretionary stock picking. The key thing to understand here is this: TSPY is not trying to beat the market through prediction. It's trying to engineer a repeatable process that combines S&P 500 exposure, daily option income, and disciplined risk controls around time decay and option expiration. Alright, let's talk about income. As of now, TSPY has an annual dividend of $3.49 per share, a dividend yield of about 13.5%, and it pays monthly. Recent distributions have been very consistent, roughly 30 cents per share every month. That's important because consistency matters more to me than headline yield. If we look at the performance, at about 16.8% total return over the past year, including dividends, and around 18 to 19% since inception. This is not meant to beat QQQ in a raging bull market, and it's not designed to throw off a 40 or 50% yield either. It sits right in the middle, growth plus income. Now let's talk about the expense ratio. The expense ratio is 0.77%, which is higher than a plain vanilla ETF like SPY, but reasonable for an active managed option strategy. You are paying for daily option execution, risk management, and active positioning. Now let's go over to the chart. What I like here is price stability, shallow drawdowns, and a structure that generally respects moving averages. Even during market pullbacks, TSPY hasn't shown the kind of violent NAV erosion we sometimes see in aggressive income ETFs. That tells me what the option overlay is doing what it's supposed to do, cushioning volatility rather than amplifying it. Now, quick pause here. If you have been enjoying the video or learning something new so far, do consider liking the video and subscribing to the channel. It really helps the channel grow, and it tells YouTube to show this content to more people who are trying to learn about income investing as well. Alright, let's continue. So, who TSPY is for? I see TSPY as potentially suitable for investors who want income, still care about capital preservation, and don't want to consistently worry about NAV erosion. It feels more like a core income sleeve, not a speculative satellite position. Who is not for? Well, if you are chasing maximum yield, this will not probably feel boring. And if you want pure S&P upside with no option drag, SPY will still outperform in strong bull runs. For me, TSPY sits closer to ETFs like TDAC or QQQI, higher income strategies that I can actually sleep with. It's not about squeezing every dollar of yield, it's about staying invested long enough for compounding to matter. How about risks? Of course there are risks. Option income depends on volatility. In a very low volatility markets, distributions can shrink, and because it sells calls daily, upside will always be partially capped. This is income first, growth second. Final thoughts. TSPY isn't flashy, but sometimes boring is actually what works. It's an ETF I think deserves more attention, especially for investors trying to balance income with long-term sanity. Personally, I'll be adding this to my watch list and will buy in small chunks when there are rate days. My buying spree is always on rate days where the prices come down and the market is giving me a discount. Alright, so let me know in the comments, do you own TSPY? Would you choose this over high yield alternatives? Or do you prefer pure growth instead? If you like this video, do consider subscribing to the channel and it will greatly help the channel to grow. Alright, thanks for watching and I'll see you in the next one.